Welcome back to Trading Day Live. Crowd Mobile, set to launch in Brazil and Colombia as it embarks on some ambitious global expansion plans. News of the company's expansion came as it booked a net loss of $752,000 for the 6 months to the end of the year, hit by costs associated with its expansion plans. But first half revenue more than doubled to $14 million. For more, I'm joined by Dominic Carosa, CEO of Crowd Mobile, in our Melbourne studio. Dominic, I might start by asking you a little bit about your business, because it does look like, you know, in the past you've picked up some profitable businesses. What's the end game, though? Can you just talk us through your model?
Yeah, thanks for having me, Ingrid. So Crowd Mobile, we've been listed for about a year on the ASX, and we're really taking advantage of the growth in mobile. And it's around entertainment content, infotainment content, and really providing part of our business, providing answers to people's questions and connecting an expert with consumers on the other end. And so, you know, very much a mobile-first company, strong revenue, and our underlying EBITDA was $2.2 million for the last half.
So how do you actually make money off that sort of model, off that business?
So we bill consumers leveraging either Apple, Google, or our M-Payments network, which means that we work with over 160 carriers around the world, allowing people, if they like what they see, if they want to answer a question, they basically simply click a button on their mobile phone and it will get added directly to their mobile account. So it's really seamless for the customer.
So how important is it for you to ink sort of strategic partnerships for this model to work? I mean, I know you inked one with 1M in a deal which you said gives you access to around 1 billion users across the globe last year. Are these sort of key to your expansion?
Undoubtedly. Our key partnerships are with Apple, Google, and over 160 telcos around the world, including Telstra, Optus, Vodafone here in Australia. And so it gives us an addressable, including the 1M deal, of over 3 billion people globally. The core focus, as we announced this morning, we're moving into the South American market. It's a big market. Brazil has a large Portuguese-speaking community, and we've now already tailored a number of our core products for launch into that particular marketplace.
Dominic, Tony Davison here. Is the end game for the company in terms of strategy to get more people using your payments gateway, or is it a bit more broad than that?
It's a little broader than that. Ultimately, you know, we're about making people smile, informing them, and at the same time making money. So, you know, M-Payments is important for us, but it's really building relationships with customers. Over the last 12 months, we've provided our service to over 3 million customers around the world, and that's continuing to grow. We've had 8 consecutive quarters of quarter-on-quarter growth, and last half we delivered, notwithstanding a statutory EBITDA loss, we're underlying EBITDA up to 2.2, but more importantly, particularly for a micro-cap technology company, we had positive operational cash flow of $3.2 million.
So what sort of impact do you expect this Brazil, because obviously today you've announced you've struck these partnership agreements to launch apps in Brazil and Colombia. What sort of impact do you expect that to have on your bottom line?
Well, firstly, we expect an impact on the top line, which in our business will then have a positive impact on the bottom line. We've already announced a number of months ago launches into Asia, and we've got some further news that we'll announce shortly around some other Asian initiatives also.
And just finally, I wanted to ask you about the costs, because obviously profit hurt by rising costs when it comes to your expansion plans due to the sort of heavy expansion you're having in the past sort of 12 months. How do you balance that out going forward? Is that something you expect to continue to hurt profits while you continue to expand the business?
Yeah, well, last half was interesting for us. We had a large, over $1 million share-based payment, which is a non-cash item, and we also made a fairly large acquisition, and there were roughly $900,000 of one-off costs associated with that acquisition. We don't expect that moving forward, and hence we've provided the market a bit of an insight. The business moving forward on an underlying basis would have made $2.2 million EBITDA, and as I mentioned, you know, very, very strong operational cash flow.
All right, Dominic Carosa, really appreciate your time. Thank you.
Thank you.
CEO of Crowd Mobile, and I should say Crowd Mobile taking a bit of a hit today, down 9.3% off that announcement at 24.5 cents. So, Ben, as you were saying, it seems like a pretty illiquid stock on the exchange. It probably doesn't take a lot to move it.
Yeah, exactly. I mean, it's moved 2.5 cents today, so clearly not a big cent per share move in order to get a big percentage move. So I wouldn't read too much into percentages. Look, it sounds like an interesting business, and certainly just looking through some of that information from their half-year result, I think it certainly is clearly an area that is growing. I think we all agree that we're doing far more today on our mobiles than we ever have before, and that